Being a general contractor is no easy task. You have to sort through emails, calls, texts, and any necessary paperwork. You also have to drive from job site to job site to inspect work being done and see how your teams are doing. You even have meetings with subcontractors, owners, designers, architects, and engineers to top it all off. Even after all of that, you still have the most crucial factor to consider in any construction project: reviewing the budget. As a GC, you have to think about tons of financial factors, from billing to the cost of labor and production. Since construction works on a project basis, things are constantly changing. That's why you and your team must understand construction accounting. Construction accounting is a unique form of bookkeeping and financial management. It's explicitly designed to help contractors track each job and how it affects the company as a whole. While it draws on all the basic principles of general accounting, it also has several important distinct features. From billing, production, or labor, contractors operate their business primarily around projects. The financial focus revolves around each job. While managers of retail companies treat each of their stores as a profit center, contractors have to treat each of their projects as a profit center, that each contributes a different amount of revenue to the company as a whole. It's helpful to view each project as a single entity with separate profits and losses from other projects. On top of treating each project as a source of revenue, they each have unique inputs and requirements to get the construction job done. Even when projects have similar production requirements, they're often subject to different site conditions or local variables like labor availability, cost of materials, and legislation. That's why contractors must track accurate costs for each project individually, as well as the types of expenses and production activities that make up the job costs. Production primarily happens on different job sites rather than fixed locations. Operations are constantly moving. Equipment and personnel move from site to site to complete various jobs. This can result in mobilization costs. Other businesses that have labor and production in the same location don't have to consider these costs. Mobilization also means the equipment and labor costs have to be tracked to each job site with the correct wage rate. The construction industry relies on more extended contracts that are flexible in their deadlines. Depending on the challenges and opportunities that are throughout a project, they can potentially change the timeline and expenses. It's no surprise that costs are added throughout a project's timeline when changes are made to the plans and specs. Either a change was made by the owner or something needs to be fixed. Whatever the reason, costs mount up. Contractors must understand the flexibility of their work and how it affects the price and contract overall. Construction has different costs than general businesses. Things like hiring laborers, subcontractors, partners, training, insurance, and more are relevant to construction accounting than most other industries. Even when there aren't any changes on a project from month to month, overhead costs will change because of the constant increase or decrease in workers. Now, before we dive into different construction accounting methods, we need to understand what job costing is. Job costing is the procedure in which expenses and profits are projected for the phases of a job. In job costing, everything from materials, labor hours, and overhead costs are given a projection. It provides a comprehensive, detailed look into financial statements. Now that we have a general understanding of what job costing is, let's talk about some methods that are used in construction accounting. The cash method is probably the most straightforward method. Contractors count income when they receive it and deduct expenses when they pay. Because of this, there are no accounts payable or accounts receivable. If money hasn't been accepted or delivered, there hasn't been a transaction to account for. This method works for small businesses because of its flexibility and simplicity, but not all contractors can use it. According to the IRS, construction businesses with less than a set average annual revenue can use the cash method for tax purposes. So if your company's average yearly income exceeds $25 million, you'll have to look at other methods. With the accrual method, accountants generally report income in the year earned and deduct or capitalize expenses in the year incurred. Income is counted as soon as a contractor establishes their right to receive it. The purpose of an accrual method of accounting is to match income and expenses in the correct year, even if cash hasn't come in or out yet. Contractors need to be aware of everything that counts as income related to their company. With everything we've gone over so far, it's good to know some construction accounting best practices to make sure your company is effective and successful with financials. Since we have an understanding of job costing, it's important to understand the ins and outs so that you can set clear goals. Construction isn't a one-person job, so why should the financials be? Job costing provides a roadmap of where your company wants to go and the timeline set for those goals. We all know that handling finances can be a headache, especially when you're doing it alone. for an entire company and on top of other work responsibilities. So rather than work alone and against other priorities, use a software solution that works with and for you. Construction accounting software keeps all of your finances secure and organized, leaving less room for error and headaches. Automating your accounting will increase efficiency and effectiveness by streamlining processes. Construction companies of all sizes constantly deal with many contractors, subcontractors, and temporary construction teams, which further complicates payroll, procurement, and various other accounting functions. To ensure everything from purchase orders and inventory and equipment is being tracked, utilized, and replenished accordingly, reliable software is needed. Here are the top construction accounting software on the market which also integrate with Red Team software. QuickBooks alone provides excellent accounting software for construction businesses. You get functionalities such as invoicing, income management, expense tracking, and tax preparation. Easily manage your clients, vendors, and employees with this app by automating your processes. Red Team for QuickBooks Online provides contractors of any size with a robust project management software solution to effectively manage projects both small and large. The integration between our software and QuickBooks provides a complete construction accounting platform for commercial construction contractors. The integration offers paperless routing and approval of vendor invoices, contractor compliance, lien waivers, and mobile access from any device, anywhere, using Red Team. Sage Business Management and Accounting System helps with invoicing, purchase orders, and cash and payroll management. You get access to a broad network of experts for industry-specific tasks. Red Team connects to Sage 100 and 300 CRE to provide your construction teams with the latest financial information for project management. With this integration, you can access job costs, AP transactions, vendor commitments, and more. Construction accounting is a complex topic with a steep learning curve, but it's not impossible. With the right tools and people to help, contractors can be efficient and successful in leading their companies in all aspects. Financials are a headache no matter who you are or what you do. It's important to know exactly where your money is going and how you're spending it. We hope this breakdown of construction accounting was helpful. For more content, be sure to visit us at redteam.com in the description below.